Hello, everyone. Chris Kapches, president of Chestnut Park Real Estate, and today I'm going to provide you with the February market report for the greater Toronto area. I want to start by commenting on actually a book that I read recently that sort of took me down a rabbit hole that's going to connect to what I'm going to be talking about in the market today, and that's Michael Lewis's book, The Undoing Project, which I highly recommend people read. But the book has got a broad application, but at the end of the day, it talks about the unconscious decisions that people make. And I want to relate that to the current marketplace. So I begin by telling you that this year, the number of sales that have taken place in January and February are 9,817. And if we look back to last year, January and February, there were 7,857. So quite a substantial improvement of about 25%. Where the unconscious component comes in, and one could say the psychological component is, if you look back to last year, you'll see that the bank rate that is driving a lot of the market activity was 4.25%. If we look at the bank rate today, it's 5%. So why are there more sales taking place today when the bank rate is 0.75 higher than it was last year? That's a contradiction which can only be explained by psychology, consumer psychology, somewhat similar to what Michael Lewis discusses in the book that I just mentioned. What was happening last year is the Bank of Canada was in the process of raising rates. So there was a kind of a hawkish atmosphere in the air. People were a little concerned about when the rates were going to stop, how high they were going to go. And as a result, there was a retraction of people engaged in the marketplace. This year, that has changed. The bank is not talking about increasing rates, but in fact has indicated that in 2024, we might actually see rates start coming down. So the hawkish nature of the bank that was in play last year has completely disappeared. That disappearance has caused people to feel a little bit more comfortable with what's happening in the marketplace. And I think more importantly, fear that they potentially might be missing out on opportunities that may be there now that will disappear when the bank starts increasing its rate. So as a result of that, we're seeing a much better beginning to the year, 25% better compared to the first 2 months of last year. So if we look at February's results, which you can see behind me in the chart, you will see that we're doing substantially better this February compared to February of last year. In fact, almost 18% better in terms of sales. This February, 5,607 sales. Last year, 4,754. As I said, almost a 18% increase in the number of sales. And again, that increase is driven by the psychology that's at play. Namely, don't want to miss out. Market may change if the bank starts increasing rates. So let's take advantage of the market now. So those that can afford the market are getting into the market, and that's why we're seeing rates go up. But if we delve a little deeper into the market, we can see that the market in February is not operating in a uniform way. And I want to demonstrate that for you. First of all, even though the market is up in terms of sales by 18%, and as we can see from the chart that was up a moment ago, that the average sale price is also up by 1.1%. If we look at housing types, we see that in fact, average sale prices for detached properties have actually come down, and average sale prices for condominium apartments have actually come down. The only housing form that had an increase, both in average sale price and an increase in the number of sales, were semi-detached properties. And that was true both for the 905 region as well as the 416 region. And why is that? Because that is the most affordable sector of the market. The high end, the detached, average sale price, almost $1.7 million. Tough to get in there. Lower end, average sale price is only about $728,000. But the people that are moving into that are probably the people that have the most difficulty getting into the market at the very low end of it. So we have this anything but uniform approach to the market right now, which I don't believe is going to change as we move forward. As we move forward, we're probably going to see sales continue to increase, and I can actually prove that that's going to be the case because early March information indicates that average sale prices have gone up a little bit, but sales have gone up, I wouldn't say dramatically, but more so compared to where they were in February, just the month before. And it's this process, the psychology that's at play for people wanting to get into the market and get into the market now before we see rates start to go up. When rates go up, it's not going to be any more affordable for people because what will happen is as rates go down, then the prices will correspondingly go up as well. So we'll be in exactly the same situation we are now, only average sale prices will be higher, even though interest rates might be a little lower. So we're in a very interesting market. It's becoming a better market for all the reasons that I mentioned, primarily the psychological reasons, and something that we can't show on the chart because there's no real way of measuring it, but it's the demand. I guess the best way to measure the demand is to see that average days on market, only 25 days. All properties sold on average in 25 days. That is consistent with a very, very strong market with a huge amount of demand. Problem is, a lot of people want to buy, but not everyone can afford to buy because of the average sale prices and the cost of money, namely 5-year mortgage rates, which are over 5%. As well, you got to qualify at 2 percentage points, even higher than that, to meet the stress test. So that's the market that we find ourselves in, getting better because people believe it's getting better, going to continue to get better. We're going to see increase in sales, but a marginal increase in average sale prices, again, because of affordability. And even when the bank decides to lower its rate, we're still not going to see an explosion in sales only because affordability will constrain. But definitely moving in the right direction, and I look forward to the March report when we can further analyze how the market is doing, and I think it'll substantiate everything we've discussed in the meeting today. Thank you very much.